Welcome. In this video, will Zbcn coin make an upward turn? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable structures on the chart is the downtrend structure that the price has been moving in for a long time. This downtrend clearly shows that the price is in a downward trend, forming lower highs and lower lows over a period of time. This type of structure usually indicates that sellers dominate the market and buyers have yet to take full control. However, it is important to note at this point that such downtrends do not always last forever, and strong breakouts to the upside can come after reaching a certain level of saturation. At the moment, the falling trend line on the chart is clearly defined. This trend line serves both as a resistance level in terms of technical analysis and as a barrier in terms of investor psychology. However, the price is quite close to this trend line, and the recent candlestick patterns are giving positive signals that a breakout attempt may be possible. In particular, the squeeze of the price towards this trend line and the slight increase in volume suggests that a potential breakout may be imminent. An upside breakout of this downtrend is not only a technical development, but also has the power to completely change market perception. This is because such structures are often the pivotal points where long-lasting selling pressure ends and buyers start to take center stage. Therefore, if the price manages to break this trend line, it would be perceived by market participants as a trend reversal signal, which could lead to a rapid increase in buying. Once this potential breakout materializes, there's a good chance that a new bullish wave is ahead. In particular, a breakout of the falling trend line could retest the resistance levels that the price has previously struggled to break through. And if these levels are broken in volume, the price could target much higher regions. So this breakout may not only mean short-term relief, but also a reversal of the medium and long-term trend. Breaking trend lines usually gives more reliable signals when supported by volume. Therefore, if there is a significant increase in volume at the time when the price is attempting to break this falling trend line, it will be important to confirm that the breakout is not fake and that the price has indeed reversed direction. A bullish breakout will bring more traders into the market, which will strengthen the upward movement of the price. Also, such breakouts are often followed by a so-called retest. That is, the price first breaks the trend line upwards, then pulls back to test it as a support and accelerates upwards again. If such a scenario occurs, it would be a textbook reversal structure in terms of technical analysis and would be perceived very positively by traders. To summarize, this falling trend line that the price is currently touching is of critical importance. If the price manages to break this line with a strong candle on volume, this would indicate that the market is entering an upward reversal and could open up significant opportunities for the price. Such a breakout could offer lucrative buying opportunities for short-term traders, but it could also be the starting point of a long-term uptrend. Technically, such breakouts are always a sign of a turnaround and a harbinger of potential upside. Therefore, the possibility of a downtrend breakout can be interpreted as a very positive and promising development for investors. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. Detailed Elliott wave analysis on the chart clearly shows that price has completed a downward move in the past consisting of 5 major waves, and that these 5 waves typically represent the termination phase of a downtrend. This quintet bearish structure is often a harbinger of a market correction or the end of a bear cycle on a macro scale. Now, all eyes are on the rebound from this bearish phase, and the chart shows very positive and promising signs of this rebound. The bearish Elliott wave count shows that the first wave starts with a sharp price loss, while the second wave develops with a softer reaction. The third wave is usually the longest and strongest bearish move, and during this wave, panic prevails in the market. The fourth wave is usually a short-term relief, but the market is still under pressure. The fifth and final bearish wave is often a period when momentum weakens, but the price once again tests the lows. The completion of this fifth wave signals the end of the downtrend in terms of technical analysis. At this point, there is an important development in the market structure that can be considered as a transformation signal. The price is now in the process of starting an upward Elliott move after the downward 5-wave structure. This indicates that a technical recovery has begun, and the price may enter a positive trend again. Currently, we can see that the first bullish wave has formed on the chart, followed by a second wave, a natural correction, in order to stabilize this rise. Once this second wave is completed, a stronger and more pronounced bullish momentum can now be expected with the start of the third wave. Especially according to Elliott wave theory, the third wave is usually the strongest bullish wave, and the price is likely to move significantly upward during this wave. If everything goes according to the theoretical structure, It is technically very likely that the price will both break previous resistances and form new highs during this third wave. Therefore, this first and second bullish wave, which is currently in the process of formation, is of critical importance. This is because these waves could form the basis for not only a short-term rebound, but also a medium to long-term trend reversal. Moreover, the start of this ascending Elliott cycle has positive implications not only for price action, but also for investor psychology. Because when traders realize that the downturn is over and a new bullish period has begun, their confidence in the market increases and they become encouraged to buy. This naturally paves the way for increased volume, stronger liquidity, and a healthier rise in the price. Although the first rising wave is just beginning, its structure indicates that strong buyers have started to enter the market. This suggests that the market balance may have started to shift from sellers to buyers. The second wave is the phase of digesting this rise, taking profit-taking and stabilizing the market. The third wave, following this natural correction, is usually a much faster and more voluminous move upwards. In this context, the fact that we are currently in the transition period between the first and second waves of upside presents potential opportunities for investors. In particular, once the second wave is completed and the third wave begins, it is possible that the price may move up to the Fibonacci expansion levels of 1,618 and 2,272. These levels are often used as targets in technical analysis, and strong moves to these levels can be observed due to the nature of the third wave. A careful examination of the chart reveals a downtrend structure that is evident in the RSI indicator. This structure is a reflection of the momentum of recent price movements. This downtrend in the RSI may indicate that investors' interest in the market is waning and buyers are having difficulty recovering their strength. However, we are now at the threshold of an important breakout in this trend. This is because the RSI is approaching this falling trend line and has the potential to break it to the upside. This is a very positive and promising technical development. As you know, the RSI indicator not only shows whether the price is in overbought or oversold territory, but it also gives us important signals through the trend lines that are forming. If a strong momentum indicator such as the RSI breaks a long-lasting falling structure to the upside, this signals not only a strength gain in the RSI, but also the potential for price to signal a similar turnaround. Such downtrend breakouts, especially on the RSI, often result in price making a similar structural breakout. In this context, the fact that the RSI is currently very close to the falling trend line and is starting to push this line can be considered as the beginning of positive signals in terms of technical analysis. Because such breakouts in the RSI are often considered by traders to be the precursors of trend reversals, we should wait for the RSI trend to break. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.